I'm Holly from Accrual Mistress Bookkeeping and Consulting, and today we're going to talk about the two reports that every small business owner should not only have access to, but should actively use when it comes to planning and strategizing in their small business. Now, if the words profit and loss and balance sheet cause your eyes to immediately glaze over, just please stick with me. We're going to make sense of it all by the end of this video, and hopefully you're going to walk away with some really great action points that you can take home and start immediately implementing to use these reports to your own benefit. So many small business owners just want to be assured about the health of their businesses. And the profit and loss and balance sheet can not only answer that, but they can also answer a lot of the other questions that come up in the course of running a business. Can I afford to hire? Is my pricing correct? And why do I feel so busy and yet have next to no cash left at the end of the day? All these answers can be found in these two reports. Let's start with the profit and loss, which is sometimes referred to as the income statement. Think of this as a movie telling the story of your business. It shows what comes in, what goes out, and what is left over a period of time. This is a report that demonstrates whether or not your business actually works in practice, and it's important to read it and review it regularly. It's not just about glancing at the bottom line, though. You really want to be looking for any patterns that might be emerging. Are expenses creeping up? Are your sales consistent, or are they more seasonal? And is that one service that you thought was filler or just to pass the time actually the most profitable thing that you offer? If you look at your P&L and review it regularly, you can answer all of these questions so that you can move your business forward in a way that's going to continue to grow its profitability. Now, the balance sheet is a little bit different. Instead of being like a movie, it's much more like a photograph. It shows what your business owes and what it owns as of a specific date and time. Your assets on the balance sheet are going to be anything that your business owns. This could include cash, accounts receivable, or any large items such as equipment, buildings, and land. As far as your liabilities are concerned, those are going to be things that you owe, maybe to vendors, maybe on credit cards, or maybe on notes payable that are due over time. Then we have a section that is dedicated to equity. That's kind of what's left over at the end of the day. It's going to include any contributions that you as the business owner have made, as well as any distributions that you have taken, and the net earnings of your business over time. When you look at these two reports side by side, they really do start to tell the full story of how your business is doing. Let's say you look at your profit and loss and you're showing $10,000 of profit for the year, but your bank balance is telling a distinctly different story with a balance of about $2,000. If you have loans that you've taken out to make improvements on your business over time, that could be the missing puzzle piece that explains this discrepancy. If you have a loan, only the interest payments are deductible to you and will therefore show up on the profit and loss. When you received the loan, you likely didn't declare that money as income, so when you pay the principal back over time, you don't get to declare that as an expense. Knowing about this and seeing how these transactions interact on these two reports will give you an idea of any red flags that might be coming up so that you can make adjustments before they become issues. One of the biggest mistakes that I see small business owners making is living and dying by your bank balance. Your bank balance more closely resembles the cash flow that's occurring in your business, not the profit, and that doesn't help you to forecast and make decisions. Additionally, if you're waiting until tax time to review these reports and see how you did in a prior year, you are way past the point of being able to make proactive decisions that can help you in the current year and help reduce tax liabilities. If you're not already working with a CPA, I highly recommend doing tax planning for your small business to make sure that you're making these decisions in real time. If you've been avoiding your profit and loss and balance sheet as a small business owner, then consider this your invitation to go make friends with them. I promise they're not as scary as they seem, and they're going to be able to tell you a lot about how your business is doing and what you can do to continue to make it more profitable. If you want any help or assistance setting up systems or just making sense of the heads or tails of these reports, that's exactly what I do. And you can feel free to reach out to me at the link in my bio. If you have any questions, please feel free to drop those below and I'll get to as many as I can. I hope you found this helpful. Once again, I'm Holly. I'm the owner of Accrual Mistress Bookkeeping and Consulting, and I hope you have a wonderful day.